Everyone knows the bitten apple symbol, but is it still worth biting into Apple shares? Even as the most valuable company in the world, with an iconic brand and billions in cash, some investors are starting to ask, has Apple already peaked? Today, I want to show you why this doubt makes sense and what's behind the performance of Apple shares on the global market. And if you don't know me yet, I'm Chad from Zero Markets, and it's important to remember our goal is to help you truly understand the market in a clear and direct way. No fluff. I want you to learn, and after each episode, see the sector with a more critical eye. Shall we take a look at Apple's story? It's almost a corporate myth, guys. Okay, it was founded in 1976 by Steve Jobs. We all know this. It grew from a garage into the first company in history to surpass $3 trillion in market value. But even tech empires face challenges. In recent years, Apple shares have shown vulnerability. Why? Because growth that once seemed infinite is now tested by new headwinds, global slowdown, Asian competition, regulation, and of course, dependence on products like the iPhone. So the question is there still room for investors to grow with Apple? Or has the best already passed? To answer that, let's look at what really drives Apple shares today. First, the business model. Apple managed to turn hardware into an ecosystem. What used to be a product, the iPhone, has become a gateway to services like iCloud, Apple Music, App Store, and now Vision Pro. These recurring revenue streams are what keep the company highly profitable, even as phone sales plateau. Second, innovation and marketing. Apple isn't just technology, it's desire. It doesn't sell a smartphone, it sells status, it sells experience, it sells belonging. And that's a differentiator no competitor has fully copied. But there are risks. The company depends heavily on China for manufacturing and faces growing pressure to diversify supply chains. In addition, premium segment saturation and new competitors like Samsung, Huawei, and emerging AI brands could limit growth. And there's another point. Apple shares today are expensive in terms of multiples, which demands a long-term view. In other words, the investor has to believe the company's future still holds something truly disruptive, perhaps in artificial intelligence or augmented reality or even financial services. In summary, is it worth the bite or not? It depends on your appetite and your investment horizon. Apple is still one of the most solid, the most profitable, and the most admired companies on the planet. But it's also a giant that now grows at a slower pace and faces a more competitive and demanding global market. If you want safety and consistency, Apple shares remain a relatively safe haven in the tech sector. But if you're after rapid growth, maybe you should bite into other apples, smaller, riskier, but with more room to rise. The secret is to understand that investing in Apple today is more about preserving value than multiplying it quickly. Now I want to know, for you, is it still worth investing in Apple shares? What's your opinion about this, guys? I want to know. Leave a comment below and let's see what investors and aspirants think about the subject. And of course, if this content helped you understand more about what's behind Apple and the major tech companies, like this video and subscribe to the Zero Markets channel, guys. That way, we know this content was valuable for you, and it helps us define the types of content that we're going to bring to you. Remember, our mission is to democratize the financial market. Our goal is that every Zero Market episode leaves you more critical and understanding the market better. After all, that's the first step so you won't be manipulated by it.